right, so I'm going to talk about silver today. Let's look at the Fed balance sheet first, and then we'll check out the S&P. So this is Brian Lewis with MMT Investing, and things just changed. All right, so let's zoom in on the recent Federal Reserve balance sheet action. I'm on the Federal Reserve website here. So you can see that it's flattened out over the last about a month. It started to go up, and we just got the new post yesterday. It's flat again, so the Fed is not pumping. They're not pumping. So the Fed's still doing some bond buying, but this is the Treasury General Account. So I mean, the Fed is not doing massive quantitative easing like QE infinity kind of stuff right now. They're backing off completely. I think they overshot it. Oh, okay, and then here the Treasury account started to flatten out. So this is a thing to watch to see if it starts coming down. Because if this comes down, that means they're spending helicopter money. But no, it's going back up. So this is taking liquidity out of the economy here. On both ends, the Fed and the Treasury are not pumping. And then this is just the Fed funds rate. It's 0.08, same as it's been, almost zero, hasn't changed. All right, so here is silver. So the kind of obvious thing to check for liquidity is the government, the Fed and the Treasury accounts. But silver is doing, I mean, it did a parabolic move. And now I want to take a look at the momentum on this because silver's crazy. Yeah, okay, so this, the parabolic move up, it went way bullish on the momentum. And then this flattening out has brought it back down to neutral. It hasn't moved onto the bearish side yet. So let's do a little bit longer. So it's just bullish, long-term bullish on silver. And then the recent move is pretty bullish. And it hasn't come down too far here. So hour candles are kind of looking at a week or so, but I'll get into it today. And it's just barely making it onto the bearish side. So completely non-convincing bearish move on the momentum. And we get a big pennant here. So these kind of pennant shapes, more often than not, are continuation shapes. Probably now 60-40, not like 80% of the time, but just a little bit more than not. This is usually a continuation pattern. And the momentum shows that it's not making it bearish now. It's just kind of settling around neutral. So it looks like a bullish continuation pennant for silver here. And so silver should be, it should be bullish if there's high inflation. But we just looked at the balance sheet and it's not showing a bunch of money printing right now. So it's not correlating. But if we look at the dollar, get a long term, and this is the DXY, it's the dollar versus other currencies. Oh, that wasn't long term. Let's go to weekly. So you can see the long-term dollar chart. Since the 2008 crash back here, it's just been a bullish trend for the last, 12 years. And we're right around support now. And it does look like it's trying to make a move down, but it hasn't quite broken enough to say that it's a weak dollar move yet. It needs to break through here and get on the other side, back test. It needs to actually get a technical setup below this line for it to actually to be a dollar breakdown. But it looks like the silver market is betting on it. And then what's gold doing? Oh yeah, gold's shooting up again. Yeah, so gold and silver are taking off like the dollar is going to go to zero or something right now. But there's a little bit of a dollar breakdown, but it hasn't broken long-term trend. So this will be interesting to see what the dollar does relative to these metals. But this is not a good vote of confidence for the dollar to see the metals kind of taking off now. And then let's check out the market, the S&P, because I was taking a look at this. I did my last episode saying the Bears last stand, and you can see this high volatility market we've been in for 2 years. Kind of the top of this bull run has just gotten crazy. It's just swinging and going into this huge volatility zone. And so we have this 2-year trend line that supported the last move up here before the Feb 20 crash. And let me just zoom in on this thing. go down to like hourly candles on the recent move. So you can see this this double line is right across from the previous island top here. So we got a lot of action in there. And then the last video when we were up here around this yellow line, I was pointing out that this is the bear's last kind of reversal point. This is the last area of resistance where it could reverse down for a bearish move. And if it does break down below this island top, it could be a big bearish move down. There's a momentum line here, and then below that, there's kind of this zone, and I thought I had a longer. There's a long-term bull market support area all in here, so it'll get interesting if it gets down below the moving average. Anyways, on the bearish side, that's a mess, but it did reverse hard off of that spot. So this is not a bull market. That was the last sort of line to get across to get into an actual kind of bull market setup. And now we are back into crazy volatile land. And so we'll have to see if it I don't know what it does from here. I mean, this is a really crazy zone. I wouldn't be surprised to see it jump around a bunch in here before it does something else. But yeah, this line, it held. So that's really interesting. So we're not in a bull market, not yet. And so again, the upside, resistance, 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 that over the next week or so, I don't see a whole lot of upside, although, it's been a bullish trend, so it probably wants to go up, but just a lot of resistance until you get above here. So not super exciting on the bullish side here. But if it breaks down below here, this is a bearish move that could happen in a day or two, a monster. So just heads up, not investment advice, but the stop should have already got hit here. Like that's where the stop should have been. It's already below there now. So this is a dangerous area that people, swing trading should already be out on the long side. And day trading, this is a really tricky area. And then long term, I don't know. I don't like it. I mean, it's just the liquidity and the fundamentals are doing basically the opposite of what the market is doing right now. So it's not as though anything really makes sense. I know everyone's saying the Fed is just pumping and blowing this market up to infinity, and I just looked at the balance sheet and for the Fed and the Treasury, and they're not doing that, and they haven't been for over a month. So they are still doing a little bit of bond buying and some Treasury bonds, and I don't even think they're buying mortgage-backed securities anymore. The last time I looked at the breakdown of the sheet, but so if high inflation and a bunch of money printing is what is driving the stock market up, it's not happening right now. So yeah, it doesn't really make sense for gold and silver to take off now unless it's just preemptive kind of betting on more money printing coming, because they're talking about CARES Act and infrastructure bills, and they're talking about doing some more helicopter money soon, and they certainly have a huge account to do it. I think it was about 1.7 trillion in the Treasury account that they can just fire into the economy. But they probably, I've heard people say they might do that around election time, which oh wow, the spread's breaking down farther. Okay, so it's flattening out. This is less inflationary. Finally, so are we actually getting some bond movement? Let's check out some bonds. Here's just a 5-year starting to break down. Okay, so if these break down, that's anti-inflation. That's a deflationary setup. It's something that like Raw Paul will be talking about, I'm sure, or like Brent Johnson. This is the kind of stuff that Brent Johnson and Raw Paul have been looking for, is the bond yields to break down. Because once these break down, that's a deflationary environment that the Fed's going to freak out about, and that's when they might start pumping more. But it probably won't be the Fed this time, because the Fed money printing doesn't really battle deflation that well. So it'll probably be the Treasury. What is like a 30-year doing? they're all breaking down. All of the bonds are breaking down. So this is oh, that's 20. Let me do the 2. Yeah, so yeah, all of them, they're all breaking down. Okay, so the bond spread is flattening and the yields are breaking down. So this means that we are moving towards a deflationary environment, which should be absolutely terrible for silver, and silver's breaking out at the same time. So this is really weird. And gold can do okay in this environment, but silver should not be exciting in this environment. And it seems like we might be seeing a rotation out of stocks into commodities or precious metals. But let's check out some commodities and see if commodities in general are doing anything special. No, you know, like corn, blah, crude. Wait, what? Oh, we're on super long-term candles. Yeah, so oil, I mean, oil has just been, yeah, this is where oil crashed back there. But the other commodities are not doing anything particularly exciting. I mean, you know, we had the bounce on oil, but it's been relatively flat the last month or so. So it's not like we're not getting inflation signals. We're not getting a good commodity environment. It does not make sense for silver to be doing great in this environment. So technically, momentum-wise on the silver, this looks like a really good technical setup for a move up, but the entire liquidity and the market fundamentals, the cycles, of course, the economy is awful and everything still, but a bad economy is just fine for precious metals. So that's something that is worrisome for stocks, all the bankruptcies and things like that, but those are not bad for the metals. So that's okay, but it's not all lining up where it makes sense for it to break out. But technically, it does look like a good spot where it's likely to break out regardless of anything making sense, which a lot of stuff hasn't really made sense since that crash. Things have been just kind of crazy. So that's kind of a look at silver. It doesn't look like a good silver environment. The real stuff doesn't look that good right now. It looks better for gold, way better for gold than silver to me right now, just based on kind of the inflation, the commodities, you know, the economy being bad, like all of that looks pretty good for gold, actually. The stock market, it's just been nutty and well, we'll see. We'll see what we get here because it did reject. You know, the last time we rejected off that line was this. Boom, was that red candle there. And so we're rejecting off this line again. So that could happen. It could happen in the next 2 or 3 days. That would not surprise me one little bit. So this could be an interesting spot to set up a short trade just because the size of a short move is big. But you know, you set up a short trade in this area probably after it breaks here would be the best technical spot. If it breaks and you get resistance here, crazy, then this is where you'd want to set it up, and then you could trail a tight stop here as a short trade. Like that's the area where it probably would break down if it makes it down there. Not quite down there yet, but this area here, you could do it from here and set a tight stop above here, and I see a lot of opportunity for a short setup on this one, and the longs are not as interesting until you get up here. So just hang out and wait a minute on kind of the long swing trading stuff. Oh, what is Q? The Qs are, yeah, the Qs came down and they bounced off the long-term line. Okay, so this hasn't broken down yet. So for a real market move down, I would be looking for the Qs to get through this ridiculous line they've been on for the last few months. You know, because this is the little crash. The Feb 20 crash is tiny on the Qs and the biggest run in history. Just nutty super bubble move. And whoops. Oh no. Oh no. Uh-oh. I think that's it. All right. think I glitched myself out of this video. But yeah, the Qs probably should lead the market down if it's going to make a real move down. Let's check the weaker sectors are. They look like they're breaking out still a little bit. So there's rotation out of the info sector that has been so strong into the other sectors of the stock market and into the metals. So I don't know what the big deal is with it's not like anything has really changed to make this happen, but it's happening. We're getting a rotation out of just this week. We'll see if it continues, but we're getting a rotation out of the infotech sector into other sectors and precious metals right now. So I think that makes the most sense as to why these are starting to move, less so than an inflationary kind of silver breakout, which doesn't make sense to me right now. But that's not to say that silver won't go up. It's just that the liquidity fundamental kind of stuff is opposing the kind of technical, well, whatever. I mean, the fundamentals have been opposing everything the stock market has been doing for a few months, other than the Fed fighting the monetary contraction. But I think it's a little bit overestimated how much the Fed has pumped into the economy. And I've said this a ton of times, where, like, yes, they are putting a bunch of bank reserve money out, but it's going to banks that are having a monetary contraction. They can't lend. They're getting defaults and bankruptcies, and that Fed bank reserve money is just going to the banks. And so it's not. I mean, the stock buybacks have come down like 80% or something. So the whole way that Federal Reserve money was getting into the stock market over the last 10 or 11 years, it's not happening anymore. So it's been a weird little puzzle to figure out, what this thing is doing right now, if it's going to keep going up. But it doesn't look like the high inflation environment that everybody thinks it is to me right now. So I still expect this thing to come down. And until we get through here, I'm going to continue to make the bear case, because that's what I see. That's what I see in the structure of this bubble. We still have a bearish setup, and then in the liquidity, they're just not pumping right now. So that's not necessarily what I expect this week, but I'm going to continue to make the bear case until we break out of the bear territory. And so that's kind of the setup that I'm seeing, is this thing, if we break down into this zone, and then who knows, kind of crazy stuff if we get past this long-term moving average. And you can see the long-term moving average. Oh no, what did I do? Okay, that's good enough. If we get below the long-term moving average, that's actually more of a bearish kind of setup. I think I broke something. Okay, so non-investment advice, happy trading. Please leave a like, and try not to break my tools next video. So cheers.